All right, good morning, Lagos. Good morning, everyone. This is Follow the Money brought to you by Nairametrics. My name is Ugodre. We do this every Monday, 8 to 8:30 on the station. Apologies that we're starting a little late. You know how Lagos can be sometimes. But nevertheless, we're here to give you another dish of what happened in the Nigerian stock market last week. Yeah, this show is for anyone who is interested or who is investing in the stock market. We give you bits and pieces of information that can help you manage your portfolio. Of course, this program reflects the presenter's views, not that of Nairametrics. It is for educational purposes only and not an investment advice. We don't give investment advices on this show. So, as you're an investor or anyone listening, always do your research and consult a financial advisor before making any investment decision. All right, so with that out of the way, we get right into the show. The all-share index exhibited growth during the week, the Valentine's week of the 14th of February. Yeah, by the way, happy Valentine's to everyone in arrears. So stocks advanced 2,120 points to close at 108,000 points. Remember, I always talk about that psychological 100,000 barrier. So it's as if we've basically just crossed it now. We're now at 108,000. If you've been listening to this show, there was a time we were below 100,000 points. But now we're at 108,000 at the moment. Last week we had 105,000.9, so we're at 2% up. And so the NGX has basically surpassed the 108,000 barrier. And who knows, maybe we might be headed to 120,000 this year. I don't know. It's going to be a tall order to get there, though. But stocks on the fly on the first 2 months of the year, as it's always been, or as it has been even since last year. Trading volume, however, did decline by 18%. Looks like there were less stocks in terms of volumes that were sold last week compared to the week before. So we went from 2.9 billion shares traded to 2.4 billion. Now, what does this mean? This essentially means that people who, like stockbrokers, probably earned less last week than they did the week before, because they basically make a margin on volume traded. So if there's 2.4 billion shares traded last week compared to 2.9 billion shares the week before, then they would have lost some money that they could have made. Right, and of course, everybody in that value chain, including even the regulators. Nevertheless, the Nigerian all-share index is now at 60 market cap of the Nigerian. So the total stocks that you have, like the market capitalization of the entire stocks on the Nigerian Stock Exchange, is 67.4 trillion. And I'll just do a quick math here. That comes to about $42 billion. Yeah, so Nigerian Stock Exchange in total, every single thing, the value of all the stocks that are quoted in Nigeria is just $42 billion. If you just think that Elon Musk was about to splash 98 or so billion dollars buying ChatGPT that just started 2 years ago, imagine 2 or 3 years ago. Started 2015. At least that was when it was founded. But we all knew what it was called, OpenAI, just a few years ago. And Elon Musk wants to buy it for $90-something billion. But Nigerian Stock Exchange, the entirety of Nigerian Stock Exchange, that started several years ago, 4 or 5 decades ago, it's just $42 billion. That is market cap divided in dollars. So, nevertheless, we're still growing. That's our own 67.4 trillion in terms of market cap. And if you convert that using 1/6, that gives you about $42 billion. During the week as well, we had 65 stocks record increases. This compares to 58 from the week before. So, there were a lot more increases during the week. Compared to last week, while we had 31 stocks experience declines, much lower than the 34 that we saw last week. So the movement was basically with stocks that were a lot more stable. So what that meant is that the Nigerian Premium Index, which is the index of the big boys, gained a whopping 10.36%. Guess who were the major drivers of that? course, Dangote Cement had a surge. I kind of always felt Dangote Cement's share price was a little bit beaten last week when I saw it last week, but gained. And of course, there was also a gain by MTN as well and WAPCO. MTN has been on my watch list for a bit. People have been asking me since, how can I get on your watch list? How can I get access to your watch list? I'm going to make an announcement pretty soon. You can get access to my watch list. It's likely going to be on a WhatsApp channel that I'm going to create. Again, it's just my watch list, not an investment advice. Anyway, NGX 30 index also rose 2.14%. However, the main box index was ended the week on a down note, just shedding a little bit of 0.79%, but not enough for any stock to go down. So we go right into the top gainers and losers. I like to always start with the gainers, but maybe I should just start with the losers today. So who are the major losers last week? Guinea Insurance down 79 kobo, or down 7.6. Coronation Insurance down 7.2%. FT and Cocoa down 7.49%. I really don't know why the stock is still trading FT and Cocoa. Don't know if they've been able to eke out any revenue, not talk of profit. Deep Capital, one of those stocks again that I really don't understand, down 8.26%. Julius Berger down 8.44%, despite pushing out their result last week, which of course I explained, I covered last week, but looks like investors weren't happy, or probably just taking off some profit off the table. 8.44%. Unicell Interlink down 9.67%, 12 naira per share. Golden Guinea Breweries down 9.9%. Boa Foods also down 10% to 373.5. That looks like one stock that might just creep into my radar. It was my radar at some point earlier in the year as well. International Energy Insurance at 10.8%, while Dark Communication was the highest loser last week and declined by 13.5% in just 1 week. Of course, we move to the gainers. The gainers consolidated. Hallmark Holdings gained a whopping 20%, closed at 3.65 naira per share. Multiverse Mining and Exploration Company gained 20.4% to close at 10 naira 90 kobo, while Eternal Oil PLC gained 22.78% to close at 45 naira. Keja Hotel gained 24.4% to close at 14 naira per share, rounding up the bottom 5 of the top 10 stocks last week. Now move on to the top 5 gainers during the week. Suno Assurance, do you have that in your portfolio? I don't. 27.94% gain last week to close at 6 naira 41 kobo. Smart Products PLC up 30% to 26 kobo per share. A lot of penny stocks in the top gainers last week. Whole lot of penny stocks, and that's why you could see the main box index didn't really move that much, because it had too many penny stocks gaining. Of course, VFD Group up 30.6% to close at 58 naira per share. They did push out their result last week, which I would get to at some point in the show, and also closed the commercial paper issuance, I believe, on the 14th of February last week. UPDC PLC also gained 45.95%. What is going on with that stock? It seems to be one of the hottest stocks at the moment on the exchange, up 45.95%, while Honeywell Flour Mills was the top gainer for the week, closing with a 47% pop last week. So top gainer there is Honeywell Flour Mill, the hottest stocks on Nigerian Stock Exchange at the moment. All right, so we move on to the second part of the show, where we look at what has been happening or what happened during the week for most of the stocks that we have on the exchange. First of all was First Hold Co. Have you heard of that name before? First Hold Co. First Hold Co. Yeah, so it used to be called FBN Holdings. So they made an announcement last week that they were changing their name from FBN Holdings to First Hold Co. Of course, FBN Holdings are the owners of First Bank, FBN Capital, FBN Quest, and a lot of all these subsidiaries that they have under that franchise. So First Hold Co. Is what the company is going to be called now. So why are they changing their name though? I was wondering, because there's been a whole lot of changes since Femi Otedola came on as chairman of the bank. So whole lot of changes. You can see basically his footprints everywhere. But according to the bank, they said the new name reflects a forward-looking vision rooted in a timeless legacy of trust, resilience, innovation, and exceptional service delivery. As part of the transition, First Holdco's rebranding includes the retention of First Bank as its flagship business and the adoption of new and unified names for its other subsidiaries in the asset management, capital markets, securities, trusteeships, and insurance brokerage. So it looks like it's a name that's going to permeate all through the business. And it kind of makes sense though, because I mean, most of the other subsidiaries were FBN this or FBN that. So I guess now that they're changing to First Holdco, others are likely going to be like First whatever. So just in where you have First Bank, so it's aligning with that First Bank, which basically has been its franchise or its flagship franchise. So interesting stuff there. I do hope that reflects in some kind of share price increase, or at least increase in the bank's share price at some point, because that's what we investors are really interested in. But a lot of changes going on with that bank. Of course, I think I already mentioned their numbers, their result at some point on the show. Their profits basically rose year on year when we looked at the numbers, but good enough. They've changed their names. Share price currently at 32.45 naira per share, dipped a little bit by 1.67% during the week. Market cap over 1 trillion. So First Holdco is now one of the suite bank. At some point it wasn't on the suite list, but now it's back on the suite list. So in terms of earnings per share, I kind of like this price to earnings ratio at the moment, 1.6x. Now what I said, the closer a stock is to 1, the cheaper that stock is. So at 1.6x, looks like it kind of looks like a bargain at 32 naira. When I recommended this stock in my own personal portfolio, when I had it as a stock I wanted to buy, it was about 26 or so naira per share. So now it's 32 naira per share, probably up 30 or 35%, between 30 and 35% within that period. So again, I always say look out for the stocks that are trading at anything less than 5x of their earnings, especially when they are profitable companies that are growing. Always looks like a good bargain. In terms of earnings yield, which is the inversion or the inverted part of the earnings per share or price to earnings ratio, I beg your pardon, 62.7%. In terms of its beta, that is whether it's a risky stock or not, 0.95%. So looks like a good bargain there. So that is it for the first half of the show. When I come back on the second half, we're going to be looking at other stocks that made some interesting announcements during the week, and then we'll move on. All right, welcome back to Follow the Money, brought to you by Nairametrics. My name is Godre. If you're just tuning in, we do this every Monday, 8 to 8:30. You can catch this particular version of this show on our Nairametrics YouTube channel. In case you're not following, you should go on there. Just pick up your phone and just search for Nairametrics TV and follow. Loads of interesting and financial content there for you. Latest episode of our flagship show, Drinks and Mics, currently on, in case you're looking for it, because I've got a lot of people asking me when is going to be the next episode of Drinks and Mics. Currently on there. You can always check it out just go there and you check it out. Another interesting, exciting episode of Drinks and Mics. Of course, Follow the Money would also be on the show on our YouTube channel later today. And watch out for Follow the Money Hot Stocks, which is a sequel to the regular Follow the Money show. That's going to be coming up tomorrow. I'm going to pulling out or reeling out some of the hottest stocks on the Nigerian exchange. So we go right back into the show. So VFD Group, like I mentioned earlier, one of the top gainers last week, also reported its full year earnings last week, reporting a pre-tax profit of 12.4 billion naira as detailed in its earnings report. This is also a strong turnaround for the company, because the year before, which was 2023, they did report a loss of 1 billion naira. However, profits they've now basically swung into a profit. Looking into their numbers, gross earnings was up 84.5% to 83.2 billion. Same kind of improvement in their revenue. 84.5%. That's a significant number. Of course, net investment income up a whopping 1,318% to 21.7 billion, and then net revenue, which basically strips out some of the other money that goes to other places, it's 32.2 billion, up 164% year on year, and then operating profit a bit down, but down to 11.3 billion. Now, remember, VFD essentially is a company that holds several investments in different businesses, and then basically makes money from those businesses, and then from the money they make from those businesses, they essentially return it back to shareholders. So almost like a holding company, or like a conglomerate, if you want to put it in that sense, but in an investment point of view. So basically have investment in several companies, and then when they get into those, it's almost like listing a private equity on the exchange. So they invest in these companies and then turn around these companies. When these companies do very well, spin them off, make some money off it, and then return some of it to shareholders and some of it to their various investors or their bondholders. So back to their numbers, EBITDA was up almost double, or more than double actually, 120% to 56.4 billion. I did mention pre-tax profit up as well to 12.4 billion, and then swinging from losses, and then post-tax profit after tax 10.4 billion as well, swinging of course from losses to profitability. Earnings per share is now 8 naira 22 kobo per share. So the MD of the company did mention what happened. So we kind of just picked out a little bit of what he said here. He says strategic investment and divestments contributed to an increase in earnings and profitability this year. We have worked on reinforcing our financial resilience, expanding our investment portfolio, and improving our governance framework with a focus on digital innovation. Interesting. He also mentioned that a rights issue of 12.5 billion resulted in a 90% growth in shareholders' funds, reaching 61.98 billion. The capital base, along with improved leverage profile, positions the group for potential growth and aims to ensure financial stability moving forward. They did also close a commercial paper during the week, I think on Friday. I think the commercial paper was going about 29-30% or so, or thereabout. There is another analysis of the company's results. You can always check Nairametrics for more of that. Now, looking at their share price currently at 58 naira per share. Of course, that gives us an earnings per share, like I mentioned, of about 8 naira. But as of last week, the price to earnings ratio was around 7.3. It probably must have dipped a lot further now because of this result. So you're probably seeing price to earnings ratio slightly below 7 times. Remember what I said, the closer it is to 1, the cheaper it is. But 7 times price to earnings ratio, that's probably where it is. Earnings yield 9.4%. They didn't pay dividend last year. I'm not sure if they announced any dividend this year as well. So that would probably determine whether it's a dividend paying stock. But for now, looks like they have experienced an interesting turnaround with the profitability recorded this year. We move on, we recorded last year, I beg your pardon. We move on to Nigerian Breweries. So Nigerian Breweries also reported its own numbers during the week, or much anticipated largest brewer in Nigeria. Just like most FMCGs struggled during the year because of exchange rate devaluation that happened last year and 2 years ago. So they did release their numbers, and as expected, post-tax profit loss of 144.8 billion for the full year 2024. That was way bigger than 106 billion that reported the year before. So within 2 years, the company has lost over 200 billion naira, about 250 or so billion in 2 years, largely again because of FX, not because the underlying fundamentals of the business has got anything to do with it. It's just FX devaluation that they've just basically outside of their control. But there were a lot of silver linings in the numbers. Their Q4 numbers appears to show that the company has recorded its first quarterly profits in about 5 months or so, in about 5 quarters. or 6 quarters. So that's basically their first quarterly profit, because they've basically just been reporting losses almost every other quarter. But they finally reported a profit in the fourth quarter of last year. So that could be a silver lining. Another major silver lining was, if you look at their top line revenue, Nigerian Breweries reported 80% increase in their top line revenue to 1 trillion. First time ever they're going to record a trillion in revenue, and the first brewer that I know in Nigeria that has done 1 trillion in revenues. That's just incredible. 1 whole trillion, and up 80.8%. So I was looking at their earnings release from their Heineken parent company's numbers, and it kind of suggested that volumes increased. That means it looks like Nigerians drank more beer last year, and of course prices also increased. So no wonder you're seeing an 80.8% increase in their revenue. So Nigerians drank more beer last year. I thought you guys said you don't drink beer that much anymore. So volumes went up, and of course, Bukola is saying maybe stress. Could be stress, so who knows? But I mean, beer sales are up, and of course, that led to that interesting growth in revenue. And of course, gross profit up 50.5% to 309.9 billion, and then operating profit also up 59% to 69.8 billion. So what then was the problem? The problem, of course, was finance charges. So that is why you're seeing that loss, because they recorded another loss on FX translation, FX transactions of about 157.5 billion. That's it. That essentially wiped out every other good thing that they did. And so that is it for Nigerian breweries. Kind of looks like maybe perhaps they have turned the corner, and then as things, if they are able to continue to maintain the sort of numbers that we saw in the fourth quarter of last year, then perhaps Nigerian breweries could also investors in Nigerian breweries could at least breathe a sigh of relief, because I know that it's been a very, very difficult couple of years. But despite seemingly better results, their numbers were down 2.8% to 33 naira per share. To 33 naira per share. A price to earnings ratio can't be available because, of course, they have an earnings per share of they had a loss per share, so you probably won't have price to earnings ratio. But who knows? Is this a good investment? Is this a stock that's going to be on my list at the moment? Watch out, for my watch list, which, like I mentioned, is going to be popping up very soon on my personal WhatsApp channel, where you want to track the stocks that I'm putting on my radar. We're almost done here, so we'll just quickly go into some of the remaining things we want to talk about. Keystone Bank. There was a story during the week that Keystone Bank is now owned by the government, because I got people calling me and wondering why Keystone Bank, like what has that got to do with anything? Nothing wrong with the bank. It's just that if you all recall, last year January, I think the central bank sacked the entire board and directors of the bank because CBN, according to them, I think the way the bank was sold at that time did not meet certain guidelines or requirements that the central bank thought that it should meet, and so for that reason they kicked out the board and management. I think if you all recall, Keystone Bank was acquired by Sigma Gulf Nigeria Limited during the Emefiele era. But so after they got kicked out, they took them to court, and the court appears to have ruled in the favor of the federal government. So government essentially saying, look, this bank is nationalized, owned by the federal government and not anyone. And so that is why Keystone Bank was in the news last week. For those who have been asking me why Keystone Bank is in the news. By the way, one important news also popped in towards the end of the week. PZ Cussons announced that its board of directors are going to convert the loans that they gave to the company. That's the shareholder loans that was given to the company by the parent company. So the parent company of PZ gave PZ Nigeria PLC loans. What a lot of this FNCG did when FX was pretty bad, or FX was scarce a few years ago, was they just lent money to their local subsidiaries, or to their local subsidiaries. so that they can use that to purchase raw materials and stuff. So, but now that FX has gone sideways and affected them, it's difficult for them to get that FX back from their local subsidiaries because, like I mentioned, they're all beat up, they all have losses. And so, what PZ has decided to do is to convert that loan, which is about 34 or so. In fact, the total loan amount was $40.2 million, with PZ Cussons Holding Limited, which is the parent company, loaned to PZ Cussons Nigeria PLC to cover raw materials and operation costs. So they're converting that $34.2 million of that loan into equity, and that, of course, likely going to dilute current shareholders. I would speak to that in my morning brief later this week. All right, so we are almost to the end of the show. Just to also mention that Nairametrics is launching its inaugural Capital Market Choice Awards in the second quarter of this year. So by April, we're going to be having a Capital Markets Choice Award. We're going to be giving awards to some of the most impressive operators in the stock market, companies that listed the most. Let's give you an idea of some of the awards that we're looking at. The company of the year, best performing stock based on return, best dividend stock based on yield and consistency, best listing or IPO of the year, best market reforms initiatives, best stockbroker of the year, equity deal of the year, commercial paper of the year. We're having all of that in April this year. So look out for that. Purely going to be merit driven, not like some of those ones you have out there. This is purely merit driven by Nairametrics. All right, so that's it for the show. Of course, you can always catch this particular episode of the show on our YouTube channel in case you miss any part of it, or previous ones, of course. And then watch out for Drinks and Mics and every other show we have on Nairametrics TV. This is Follow the Money, brought to you by Nairametrics. And until we see you again next week, do have a profitable week ahead. Goodbye.